financial markets in turmoil.
What are the root causes of the financial crisis?
The dollar losing value.
Heading for its biggest loss in nearly 3 decades.
Will Social Security even be there?
I don't know.
Buy or rent?
That's a very good question.
Interest rates.
I'm not so sure.
Where do you put your money?
I don't know.
Welcome to the show that answers your questions. This is Follow the Money Weekly with your host, economist, and best-selling author. Here's Jerry Robinson.
Well, friends, welcome to you all around the world. Welcome to Follow the Money Radio. So grateful to have you along for the ride today. We got a great show. Today we're going to be talking about gold. In fact, you can tell from the title of today's podcast, the case for $5,000 gold. Right now, gold is just below $2,000. In fact, on Tuesday of this week, the August gold contract, the price of gold, the futures contract for gold, settled at $1,800 an ounce. That's the highest price we have seen since September of 2011. In fact, if you go back and look at 2011, we see the actual record settlement for the price of gold was at $1,891. And so, when we think about where gold is now, at about $1,800, we have quite a ways to go to get to the $5,000 gold level. But realize that just another $100 from here, we're going to be at a new record price. So once we begin to see headlines coming out telling us that gold is at a new all-time high, that of course will be very bullish and it will lead to more momentum buying inevitably. But people see the writing on the wall. And I think that's really why we see gold prices elevating in this current environment. Of course, stocks have been doing well as well, and silver also doing very well. In fact, silver actually outperformed the price of gold, as it typically does whenever things start to rev up. But silver actually outperformed gold in the last quarter, up about 32% over the last quarter in Q2. Gold was up about 13% for the quarter. Year to date, gold prices are up about 18%. And many analysts are expecting gold prices to go even higher by the end of the year. We would certainly be among that crowd, as you can tell, certainly with today's podcast title. So today we're going to be inviting on our good friend and precious metals advisor, Tom Cloud. For those of you who are not familiar with Tom, he's been a gold and silver dealer for 44 years, and he has seen multiple bull and bear market cycles. And we're going to talk on today's interview and today's podcast about where Tom sees the price of gold and silver going and why. We'll kind of lay out the basis here for why we would expect gold and silver to rise in the coming months. Now, before I bring on Tom, I'll just share with you some of the reasons why I personally own gold. We've been talking about gold here for as long as we have had this podcast, all the way back to 2010. So I believe that gold is a primary beneficiary of America's economic woes. One of the reasons why I'm very strong on gold and why I own physical gold for my own portfolio, and I tell other people that it would probably be something they would want to consider. Of course, I'm not a financial advisor, but it's something that I think people should consider. Because gold is money. Humans have considered gold as the ultimate store of value, the unit of account, the medium of exchange for millennia. Gold has long been viewed as money, and no amount of paper money, no matter how much they print, can change that fact. And so gold being money, and even when we read in the Bible, the Bible tells us that gold is God's money. So undoubtedly that people recognize gold as money no matter where you go. And gold has essentially kept its value over decades and centuries of time. The old illustration that's often used is that 1 ounce of gold was worth about the cost of a very nice suit back in the early 1900s, and the same holds true today. When you compare that, by the way, to the US dollar, it's lost about 95% of its purchasing power since the early 1900s. So gold really shines as money. The second reason that I And bullish on gold here is because gold has intrinsic value and it exists in finite supplies. So not only does it have this enormous track record, this 5,000-year track record, but also it exists in finite supplies as opposed to the fiat paper currency like the US dollar that's being printed like mad right now. It's insane how much money, or how much currency we should say, is being printed. And so gold's value cannot be derived by a simple government edict or a decree. Governments have tried to manipulate the price of gold, but as the breakdown of the Bretton Woods Agreement of 1971 proves, is that it's very difficult to do. The modern paper currency today we have has no intrinsic value. The only difference between a $100 bill and an old piece of paper that's trash is the fact that the government says that the $100 bill has value. But that value is not intrinsic, meaning that the $100 bill doesn't hold any value in and of itself. It's like an old piece of scrap paper. It can be used as fire kindling. The government cannot perpetually confer value on mere pieces of paper and expect to have a sustainable economy and monetary system. So I own physical gold because it has real intrinsic value and it's in finite supply. The third reason why I personally hold gold is because I do not trust the United States federal government. I don't trust the monetary wizards at the Federal Reserve to protect my family or to preserve my purchasing power at all, right? So by owning and holding physical gold, I am able to insure myself against Washington's numerous inept monetary and fiscal policies, right? We got tons of reasons. We got a $26 trillion national debt. Nobody seems to care. We have a $6 trillion deficit staring us in the face this year. We recently read that the amount of money that the federal government is required to fight this coronavirus here in the United States, coming up on the equivalent of the Revolutionary War, the Civil War, the World War I and World War II, all of those combined, adjusted for inflation, is what the government is spending to fight the current public health crisis, right? So they have no plan to solve the entitlement crisis, let alone how to finance the current public health crisis effort. And so then you have student loans that are out of control, right? Personal debt levels are out of control. So when you add up all that and you realize that the government has no real plan to protect you from what's coming, gold serves as insurance, right? That's a really big reason why I own physical gold. It insures me against an out-of-control government. And let me just mention one more. Another reason why I own gold is predominantly for diversification. Some of you might have heard of our diversified 6-month liquid savings plan that we created here at Follow the Money. Kind of a step-by-step process for people who want to actually diversify their savings in addition to their investments. And you can find information about that, by the way, by going to followthemoney.com/DSL. That's D as in diversifies, S as in Sam, and then L as in liquid. So DSL. And you can read about it there. But in essence, we like to diversify our savings, not just among US dollars, but we like to also hold physical gold and physical silver. So we like to diversify our overall savings, but also our investments. So I keep up to about 15% of my total investable assets in precious metals, predominantly towards gold, but I also own silver and a lesser amount of palladium and platinum. So obviously we are gold bulls here at Follow the Money. We've been for a very long time. And my upcoming guest, Tom Cloud, is going to be talking with us about why we could expect to see gold reach $5,000 per ounce in the coming years, as well as silver, which could also, according to Tom, reach $75 in the coming years. It's really quite something, and it really seems early. Even though we have a lot going on right now, we've begun to see a nice upward creep in the price of gold and, to a lesser extent, silver. We believe that this is very early, that the big bullish drivers for gold and silver are already intact, but they have not become fully apparent to all investors. And as that happens, we believe the upward price momentum of gold and silver could really, really be shocking to many people who are not prepared. So with all that said, kick back and enjoy this interview with Tom Cloud, our precious metals advisor, and learn why he believes gold and silver prices are heading north, and how you can participate.
And Follow the Money returns after this.
Hello, friends. Jerry Robinson here from followthemoney.com. Are you a new or aspiring trader? If so, I want to invite you to a upcoming trend trading bootcamp that we have scheduled for July 25th of this year, 2020. It's going to be a full day of rigorous trading education that will equip you to profit from the direction of any financial market anytime. You will learn a step-by-step system for making money in the stock market, and you're going to receive a tremendous amount of education in this 6-hour course. It's a very unique course, our Trend Trading Bootcamp. We've already had many people go through this bootcamp and have had wonderful feedback. In fact, if you take a look at our website, followthemoney.com/bootcamp, you can see the full online schedule, which begins Saturday, July 25th at 8:30. We begin Module 1, and we conclude the day at around 5 o'clock, 4:30 or 5 o'clock Central Time, with 6 different sessions. You'll also receive a packet in the mail filled with lots of information, many different resources that you're going to have access to. This is a course that will literally help you move into a part-time trading business. If you're wanting to turn trading into an income stream in 2020, you need to be at our Trend Trading Bootcamp. Learn all about it online. followthemoney.com/bootcamp. That's followthemoney.com/bootcamp. All right, well, my next guest hardly needs any introduction. If you've listened to Follow the Money Radio for any length of time, you've certainly heard him. Tom Cloud. He's a precious metals advisor, been in the business now for 4 decades, more than 4 decades, helping individuals just like you with gold and silver purchases as you want to allocate some in your portfolio to physical gold, physical silver, even with precious metals IRAs. Tom Cloud has been the go-to man for so many of our listeners. Tom, it's great to have you on the podcast today. Thanks for joining us.
Jerry, it's always great. I love your followers. Do such a great job of diversification and education, so it's always fun to work with people like that.
Well, and I know we appreciate you for helping them diversify. In the world of finance today, gold and silver get very little attention, but how well they have performed. In fact, just on Tuesday of this week, Tom, of course you know, gold prices touched $1,800 per ounce. That was the highest close we've seen since September of 2011. And if we go back just over the last quarter, we just closed out Q2, and we've seen some great growth in gold. Gold went up about 13% in Q2. Silver tripled that almost, up about 32% during the quarter. So you've been through multiple precious metals bull and bear cycles over your 40-plus years as a dealer in the space. Tom, are you getting the sense that we are on the verge of a major bull market based on all the data?
Jerry, not only am I feel almost certain the people that have been around this business over 40 years, we're all kind of in our conversations feeling the same thing. Just the premiums are soaring, and there is no physical silver and gold hardly to be had. We're actually having to wait on gold to be manufactured. I mean, this has been 8 years since we've seen the demand outstripping the supply. You know, at some point the price gets up and people, I made 20, 30%, so I'm going to get out. You know, where are they going to go with it? They don't have something to put it in. But, you know, we think this is the real deal, and we think we'll see an all-time high in this third quarter, even though ordinarily the third quarter is not one of the strongest quarters for demand because there's a couple of the months or summer, July and August. But this year is completely different. I mean, it's just the debt and how much we're spending on the coronavirus, unemployment figures, people that are opening and having to close back. I mean, this thing, you've got to treat it like it's going to be here for a long time. And, you know, some people say it will only mutate for 2 months and it can come back. And I deal with some professional athletes that have had it, and they're told by the doctors, you know, mutation is a few months, not a few years on this virus from their test. So, yeah, there's so much, Jerry, but the main thing I hear is just how scared people are about banks, and if the economy falls into a depression, what it will do, because they know the bank laws are bad, and then the 401ks falling off the table, lack of diversification. So we're seeing, like you said in your opening statement, unbelievable amounts of people coming out of their company, retiring early, a lot of pilots. I mean, I'm talking about a lot of pilots we've dealt with where they come out of their 401k and get 2 self-directed IRAs. So, yeah, I think this is the real deal. There's just too much demand out there for it not to hit an all-time high soon.
And I would assume you feel the same way about silver. Silver, and in fact, when I look at the price of silver on a chart, it's encouraging, although it's been running into this resistance for quite a long time at $19. So when we saw that breakout of gold earlier this week up to $1,800, that was very encouraging. Silver has been, as you well know on the charts, really facing some stubborn resistance at about 19. And just from a technical viewpoint, Tom, what I've been telling our own members is that once we see silver pierce above about the $21 area, $21.50, I can't remember the exact number right now on the chart, but around 21, when we smash above that, I would expect, just from my own experience, I would expect to see probably parabolic price moves in silver. But there's a lot of resistance that still overhangs. And in your opinion, is the current bullishness in silver that we see, is it justified by the current industrial demand, or is this more of a story of momentum buyers speculating on rising prices based upon the economic situation we're in?
Well, there's no question that it's a lot of momentum buyers. You've got the industrial purchases, which, you know, you did have the coronavirus. You had the lack of demand of development of the electric cars, so you certainly had a decrease. And, of course, as I've said many times, if the world keeps printing money to stay out of a recession, silver's going to hit that, we have it at 2060. If it hits 2060, we think it's going to go parabolic and go past the 50. So someone waiting to get in, unless they've got a better place to put their money, silver's like a store of value. It's going to happen, but certainly it always has that one low factor laying under. That is, do we go back into a depression? If we do, gold is going to be it. Gold is going to keep going like it did in 07 and 8, and silver's going to pull back with the stock market if they do that. But most people are willing to bet part of their portfolio that we're going to monetize the debt, we're going to have this huge deficit, we're going to print money, we're going to have some inflation from it, some rising interest rates from it, and silver's going to do fine. But the thing you said, if people want to wait around and watch it sitting here between 18 and 19, that's fine. But they're the very ones that usually kick themselves in the rear end when it goes parabolic. And the 2 times I've been in it, the 1977 to 1980, and then again in the 2007, 2008 to 2012. The 2 times we've seen it do that, so many people just waited too long. And what I'm saying is you can't do that. You need to get in with part of your portfolio into the silver and don't try to do it now. If you're disciplined enough to sit there and say, I'm going in if it goes through 19, that's fine. But you're also going to see a higher premium because right now I have never seen the silver product is less available than it's ever been in my 44-year career of doing this. I'm telling you, it is hard to source silver right now, especially any COMEX products. So, so it is being driven by speculators that are saying, we think Trump or Biden would print the money. The deficit is atrocious. And while we're there, just let me mention, Jerry, as I did on your show last Wednesday that they can find on YouTube, is right now, in 5 months, we've already gotten the biggest deficit in world history, of any country in world history, and we're going to go to somewhere between 6 and 7 trillion, when the biggest we've ever had is 1.7 trillion. That's the biggest deficit we've ever had. And right now, based on what is costing daily, we're going to go over $6 trillion this year in a deficit. And that's going to be tremendous for silver as inflation ekes back. We're already seeing food costs explode. We're going to see oil prices back up as car usage and gasoline usage accelerate. I mean, it's going to be something to behold.
You know, you bring all that up, and it sounds absolutely shocking, and it is. I mean, the fact that we are dealing with a $6 trillion deficit in a single year, I mean, that's just absurd. It's just incredible. But it also is interesting because you and I both lived and taught people through the 2008 economic crisis, and you recall, as I do, that gold and silver really, the narrative began to really build in 2009. And we began to see a real nice breakout as people started realizing, wait, you know, we don't have the money to solve these problems, and how are we going to do this? And so suddenly inflation fears picked up, and then we saw for a period of, a couple of years where gold and silver were just all the rage, and they were moving higher and higher and higher, and the narrative was there. So when you think about the issues we were facing back then, Tom, we had a lot of people who understood the problem. But today, in 2020, fast forward to where we are today, consider how early we are in the narrative, considering that gold prices have not broken out to a new all-time high yet. We have worse economic pain than we had in 2008, and yet the people who are cheerleading, like the gold commercials and the silver commercials, and then even the Tea Party and all of these people who are responsible spending, there's no one. It's hardly anywhere. So it almost builds the case, Tom, that we're so early in this narrative that by the time that builds the case for what you're saying to not to wait, because by the time this thing actually begins to rev up, we know it's not going to be different this time. We know that people are going to realize that deficit spending is wrong, that it can't work, that you can't do it forever. We're also going to see people talking about the national debt. It may take the election, Tom, of Joe Biden to shock the Republican Party back into remembering about deficits. But right now, they seem blithely, completely unconcerned about what's happening to the economy.
They are, and like you said, it's. I have never, in my consulting business, at about 7 years old, where I go in and work with families. I just finished yesterday, one working where we get in and talk about wanting to leave this and that, where they want to leave it. And I'm telling you, it's like every week there's a consulting job. And right now the financial advisors are sending people to me that don't normally even do gold and silver. But they know if they're going to keep their job as a money manager with certain clientele, they're not going to sit there and give the broker that's supposed to know what to do, supposed to be an expert in investments, and doesn't have God's money in the portfolio. They have all paper investments, no silver, no gold, no platinum, nothing that the government can't make and mass produce. Just as we're talking about, $6.5 trillion deficit this year. They're going to have to print all those trillions of dollars, and the gold and silver have to go up by definition. They're going to go up because there's a lot more paper chasing the fewer products. But as I said recently, between the new bank laws where you're a lender to the bank You don't own your own money in the bank. FDIC has almost nothing to ensure what they're there. We've got that group of people coming at us. We've got the huge group coming out of their 401ks, getting 2 IRAs, one for their stocks, bonds, and cash, and one for precious metals, because they don't want to buy an ETF. They want to know they've got the physical metal either in their hand or in a storage that we arranged for them at the cheapest rate out there. But I was talking to a billionaire 4 weeks ago. He calls me about every quarter, 3 or 4 months. And we've become very friendly on the phone, and says to me, he says, Tom, I talked to my friends. He said, even guys that are worth a few $100 million, they don't get it. They're used to trading, hitting a home run on a product, so forth, so on, but they've never looked at maintaining their wealth, passing on their wealth, evaluating what gold and silver do in a portfolio. And yeah, it's like you said, a 35% quarter in silver going up, and you would think, even though we've had a lot of increase in volume, it's a fraction of what it should be. It's a fraction of what it should be. But we'll see all-time highs. In gold right now, it is money, and central banks are buying it, and there's not any reason to be holding back, because we're going to go to an all-time high, but we're going to go much higher. It's not going to stop at 1,900. I mean, we're talking 2,000 to 5,000, depending on who you talk to, and how parabolic it gets, and if banks are involved or not. If banks are involved in failures, we're talking about 5,000 plus gold if that happens, which rumors are all over the world that the banking industry is very suspect and getting more suspect every day. Just look at their stocks.
Yeah, so
yeah,
true.
I feel good about it.
Yeah, gold is up 50% since President Trump took office, and I'm with you. If history is any guide, based upon what we see here, gold is at least likely to double. I mean, at the very least, but I think you're more right in your line of thinking. And then silver could certainly quadruple from here.
Silver will quadruple. I would say that silver has been to $50 an ounce twice. I mean, I'm looking at, everybody thinks I'm crazy because I'm only looking at 75 or 80. And, I mean, even good friends of mine, they say, it's going to be 150 and above. And I said, I don't feel comfortable. I've looked at all the charts. 44 years I've been in this. I feel comfortable talking about $75 silver. I do not feel comfortable talking about $150 silver, even though it could happen.
Mm-hmm. Interesting. So let's talk about what could derail this, because I think both of us see that we're on the cusp of probably one of the most incredible bull markets in the precious metal space that we've ever witnessed. But I guess there are a couple of things that could snag it. One of them being interest rates. The Fed has dropped interest rates to zero. They've purchased at least $2 trillion in assets, including recently downgraded junk bonds and all of this. They've launched 11 different lending programs. But despite all of that, the New York Fed president, John Williams, said this week that even if the worst of the global health crisis is over, the U.S. economy is still far from healthy, quote, and a full recovery will likely take years to achieve, unquote. So based upon his comments and based upon our observations, it seems like interest rates will have to remain low just to be able to pull us out of this crisis, if that's even possible. And gold, of course, is very well positioned as interest rates are submerged. In other words, if inflation began to become a problem, Tom, and the Fed was forced to raise interest rates, that could probably harm the rally in gold and silver. True?
No, absolutely, it could. Silver's biggest problem is a world depression. If the velocity of money just quits, no matter how much they print, and it's still not enough, you have 20% unemployment or 15%, and it gets in there, then certainly the demand for silver for electric cars and all the other uses of silver, I see it more of a problem that could snag than the gold. I think with the central banks, the way they're buying it, the way we're seeing large investors buying gold and putting on the sidelines, I just look at, there's just not much that can derail it except, and I don't know the right word except to say the world market try to put a cap on gold at some number and say we're going to wipe debt out and start all over. That number's 12, 19,000 an ounce. And the ones of us that have it make a home run. The ones of it that didn't have it didn't make anything off of a reset. But with my gold business that I talk to very, very well-known people, that is a possibility on gold. Silver will always be an industrial metal, so it's not going to get, it's not going to have a lid put on it. It's going to always be a little more volatile, but when the home runs hit, it's going to be the biggest home run. But you've got to be able to follow it, and like you said, looking at the indicators when those interest rates start rising after that, you've got to pick a number you're going to be happy with and getting out on the silver. I think the gold market itself will tell us when to get out. The silver, I don't. We're going to have to make our own decision at some point because silver will always be an industrial metal first, an investment metal second.
You're listening to the voice of Tom Cloud. He has been with Follow the Money as a precious metals advisor. He's been right here on this podcast for many years. In fact, almost a decade now, actually an entire decade. But Tom, we have many new listeners, and some of them have never heard you. And for those who are out there saying, this all sounds good, I don't know what to do, though. How would I actually go about buying gold and silver? What does that even look like? I'll just begin by saying that over the years, I have purchased my own gold and silver from Tom, and typically what Tom has recommended that I do is buy the best deal that I can find on silver, typically the rounds, but there's other things that we've also done over the years. And Tom, for those who are out there listening to this, maybe they trade stocks, maybe they buy ETFs, maybe they have a 401k, but they just really don't know where to start with gold and silver. Just give us a real quick 101 on what it looks like and how that process works.
Well, as all your listeners know, Dan Scoggins and Jade and my daughter and I, we've all been in this and talked many people through it, but you just call us on our toll-free number, which is 800-247-2812, and we'll walk you through because we have the lowest. We'll give all your listeners free shipping, not only their first order, but we'll lock them in to always get free shipping, and we'll take them. We have our markups above our cost run 2 to 3%, depending on how much you're buying and what it is. It's incredible. We don't know anybody else out there doing that, so we earn our pay, so to say, and educate you. We send out specials that are amazing. Well, not quite as often lately because they're hard to find, but we'll go through and answer all your questions about that. You can take delivery of it, or if you're afraid to hold it, we'll set up the lowest storage rate in one of the COMEX warehouses in the world. What it costs you, the numbers are so low, we're not allowed to talk about it on the internet because we're a lot lower than an ETF. Just think about that. Funds with billions of dollars in it, and you can store cheaper than they can. So just call, and we'll go through and help you understand the market to see if you want to get in to gold and or silver with part of your portfolio. Once again, that's 800-247-2812. And on an IRA, we can be your representative and your broker and work with you on what you want to buy, but we cannot be your custodian. But we'll point you in the direction of 2 or 3 custodians, and then you can pick the one you want. So that's how easy it is.
You know, Tom, with the amount of debt being created out of thin air to finance the various global monetary and fiscal deficits around the world, this is extremely bullish for gold going forward, and certainly for silver as we move forward. And just being able to have something like gold or silver. I was just I occasionally I'll break out my gold or silver and I'll show my children. I have two young boys, as you know, and they like to hold the physical silver. And when they hold it, I say, "You're holding money." And so few people today, Tom, have actually ever held money. They've held currency, they've held paper, but how many have actually held money? And so when they hold that gold in their hand, they are holding, as you say, and as the Bible even says, what's God's? It's God's money. And so how incredible that is that we can even teach our children, because young people need to know what money really is. And it's certainly not the green paper that's being printed like wallpaper in Washington. So we've lost our way, Tom, in so many ways when it comes to this. And I thank you so much for educating our audience on this topic, helping them secure gold and silver, physical gold and silver for their own portfolios. And friends, you can do that. Just call Tom Cloud. Just call him up. Say, "Hey, I heard you on Follow the Money Radio. I heard you talking to Jerry, and I want that free shipping that you offer." That's a great deal, by the way. That stuff is heavy. And when you add up the shipping cost, I mean, that is very generous. And also, we should also add, Tom, for those who don't know, is that there's going to be a time to sell in the future. There's always a time to buy, and there's always a time to sell. And when that time to sell comes, Tom, what's so incredible is that you don't charge the typical back-end fee that so many of these other dealers charge. Many people say, "Oh, great, I bought some gold," but then when they go
they charge you the same thing.
But then when they go to
sell,
when they go to sell it, they got to pay a tremendous fee. And so the elimination of that back-end fee that you provide is something that you don't talk about too much, but so many people benefit from that. And
amen. Help them make it. So hopefully y'all give us a call and we'll talk while you have time to do your homework and ask the questions you need to know, because when this thing starts, just like we saw back in March, when you're seeing multi-million-dollar weeks of gold and silver moving, when it starts that again, you want to get your answers before then and get in there whatever percentage you want allocated in metals, and get in there and get ready for the next big run-up.
Hey friends, this is Jerry Robinson from Follow the Money Weekly. Recently, we have been receiving many emails from our listeners commenting on the great help they're getting from our precious metals expert, Tom Cloud. Gold and silver are excellent hedges against the growing threat of coming U.S. inflation. Who's your gold guy? Make it Tom Cloud. With over 30 years experience with precious metals, Tom will answer all of your questions. Don't buy your gold and silver through some call center and pay inflated prices. Call my good friend Tom Cloud and speak directly with him and get all of your questions answered. For a limited time, Tom is offering free shipping and insurance on every gold and silver purchase made by our listeners. Call 800-247-2812. And when you do, tell him that Jerry Robinson from Follow the Money Weekly sent you, and he'll throw in that free shipping and insurance on your entire order. Call your gold guy, Tom Cloud, right now for the very best deals on gold and silver coins. 800-247-2812. That is 800-247-2812. All right, friends, I hope you enjoyed that interview with Tom Cloud. And let me encourage you, if you do not have physical gold and silver and you have questions about how you can start that process, or you just have questions in general, give Tom Cloud a call. Talk to one of his staff, talk to him, and get all of your questions answered. Just give him a call at 800-247-2812. Tell him that Jerry from Follow the Money sent you. And as he mentioned, and he'll throw in that free shipping and insurance on every order that you make from this point on. So it's a very valuable deal. Just give him a call at 800-247-2812. All right, friends, well, that brings us to the end of our program. Thank you so much for tuning in and letting us be a part of your life right here on this broadcast. And as always, I'd like to leave you with a final word, this time taken from the book of Proverbs, chapter 13, verse 22, where it reads, "A good man leaves an inheritance to his children's children, but the sinner's wealth is laid up for the righteous." Indeed, one of the most compassionate things you can do and most forward-thinking things that you can do is create a financial plan that not only takes care of you and your family, but that also takes into consideration your grandchildren and your great-grandchildren. It's such a wonderful thing to be able to do. And if you don't currently have a financial plan and you need someone to talk to, we have created our Christian Advisor Referral. It's a network with Christian financial advisors across the country. And if you need someone to talk to about building a financial plan so that you can leave an inheritance to your children's children, we want you to contact our Christian Advisor Referral. Simply go to followthemoney.com/advice, or just contact us through our webpage and let us know that you want to be put in touch with a Christian financial advisor. We'll put you in touch with someone who can help you make the most of the resources that you have been entrusted with. Remember, friends, when you want the truth about the global economy, just follow the money. Have a safe and prosperous week, and we'll see you right back here next time. Until then, God bless.
All of the information contained on the Follow the Money podcast is strictly for informational and educational purposes. It should not be construed as specific investment advice. The views and opinions of our guests and sponsors, including Tom Cloud, are their own and do not necessarily represent the views of ftmdaily.com or Robinson Media Group, LLC. Jerry Robinson does hold an insurance license and at times may offer consulting on life insurance and fixed retirement income products. Follow-up, individualized responses to email or phone requests that involve the rendering of personalized investment advice for compensation will not be made absent compliance with state investment advisor registration requirements or an applicable exemption or exclusion and applicable insurance regulations. Past performance is not indicative of future results. You should be aware of the real risk of loss in following any strategy or investment discussed on the podcast. Remember, never do your financial planning through podcast or radio. It's your money. Be wise. Do your due diligence and always consult a trusted financial professional before making any financial decisions.